All right, it gives me great pleasure to bring on board Mr. Vijay Kedia to talk about markets, valuations, where is he investing, what is he planning to, what is there on his radar, and which are the new songs he's planning to add to his entire bouquet of Vijay Kedia the singer. Mr. Kedia, fantastic to have you back on ET Now. It's good to have you back, and let's start the new year with a bang. First, we'll start with your view on the market. In 2020, Mr. Kedia, has been a year where perhaps an investor has seen all kind of market emotions. A crack, a crash, then that was followed by an unbelievable rally. And now there is a trace of euphoria and excitement. What will be the dominant theme or the dominant emotion for 2021?
Happy New Year to everybody out there. Let me tell you, for me, it is very difficult to assess that how this 21 is going to pan out. But one thing I would tell you that I am fully invested, and I can also sense that there is, of course, market is really euphoric. But it is not that the first time we are seeing this euphoria. In my career also of say 25, 30 years, I have seen many such kind of euphoria in the market. And so that is part of the game. So the only thing is this, when the weather is windy, then you have to take care of your cap. So this is what the principle I am also applying in this market. And I am trying to invest in the shares which can be called, according to me, I may be wrong, which can be called all-weathered stocks, whether there is euphoria, whether there is gloom and doom, or whether there is a crisis or whatever in the market. So I think for a long-term investor, that would be the best strategy to remain invested in this market. But of course, one has to be careful, and not this time, every time. So careful is a word which always flow with us. With every investor in the market, but it's okay. So that's a part of the game, as I said.
Well, in one of your tweets, you said that there are three emotions in the market: careful, fearful, and cheerful. So let's talk about those three emotions and how would you like to apply them. Which end of the market do you think you need to be cheerful? And which end of the market do you think you need to be careful?
Let me tell you one thing, Nikun. All the time I'm careful and fearful. They're both together, so I cannot discriminate, because I think when you are investing in this market, you don't know what is going to happen tomorrow. Like we never predicted what is going to happen in March, and we never knew also that what is going to happen after that, post-COVID. Like this kind of V-shaped rally which has come in the market. So we never anticipated. So I am always careful, and I am always fearful, and I'm doing yoga and meditation. So I'm trying to be cheerful every time. So to me, if you ask me, all these three things are going together. But of course, for the new investors and the investors which are joining the party now, I think they should be fearful, of course, because this market is certainly not cheap. So that fear factor should always be there in mind. And this is what I would like to say.
When you say that the weather is windy and you need to be careful, then why are you fully invested?
I will give you a reply in this way. Like suppose if Titan gets a feeling that the gold price is going to crash, say $500 from here, and which happened also after 2014, gold price went down from $2,000 to $1,000. So do you think that Titan will sell its stores, or they will sell all its gold in the stores? No, they will continue to do that business, right? Whether gold price falls $500 or it goes up $500. So what do? They try to balance their risk. They have to be in the game. So this is what I am also trying to do, that I am trying to invest in such stocks, as I said, that all weathered stocks, whether they are all weathered or not, I don't know. but I'm trying to do, So this is, I would say, reply to your question.
Mr. Kedia, markets always vote for rate of change, and since market is a representation of collective wisdom, markets have been right in calling the economy always right. Given that right now markets have moved up in anticipation of strong earnings, and when earnings recovery will happen in 2021 or second half of 2022, do you think these prices are unlikely to move higher because markets have already priced in earnings recovery?
It depends when you are talking about earning recovery. Hello?
Yes,
Hello?
please. We can hear you.
Yeah, sorry. So it depends that what kind of recovery you are anticipating in your portfolio. If you are anticipating, or if your visibility is for FY21 or FY22, then certainly that is there in the price. But if your visibility is beyond 22, or say you have a visibility of 23 or 24 or 25, by any chance, then I think maybe you will find a value in many pockets. And one more thing I would like to add here. If you compare the price in the market from March low, then you will certainly find stocks are very expensive, because many stocks have gone up by 10 times or 12 times or 5 times. But if you compare, mainly I'm talking about mid caps and small caps, but you compare them from their 2018 and 19 lows, then you will find that there are still value in pockets, in many pockets. There are many mid caps which I think, according to me, are still cheap compared to their value, not just from the 18 and 19 comparison. And from their fundamental point of view, I think you might get value in many pockets. But again, as I said, that one has to be fearful and careful in this market.
What kind of market do you think in next 2 or 3 years we could be staring at? When I say markets, they always follow a style, or they always follow a template. Sometimes dividend investing works. Sometimes consumer stocks, they work. Right now, the flavor, I guess, is PSU and tech. What is your view on what kind of market do you think we could be staring at in terms of a style, in terms of a pattern?
I am basically, as I had said, I think earlier also on your platform, I am little bit changing my portfolio and, investing into tech stocks and mostly product-based technology companies, be it from IT field or from from telecom or whichever area. So I think time for India's product-based technology has come. So I am actually a little bit tilting my portfolio, balancing my portfolio, and selling some old stocks and investing into tech stocks, technology-based, product-based technology stocks. That does not mean that other stocks won't rise, or consumer won't rise, or cyclical won't rise. I'm not saying that. But I am investing into these kind of stocks.
Okay. When you say you're selling and you're buying technology, let's first understand what you're selling.
No, I'm selling in the same. I have reduced my holding in some of the old stocks that you have already, I think, we have discussed earlier also. So I have reduced some of my holding in some of the old stocks and diversified into product companies. Like Sudarshan Chemical, I reduced my holding a bit. And Timken also I still have Timken, very small part of Timken I sold. And some stocks, other stocks like this.
Okay. Why are you looking at buying into product-based companies? Because historically, India has not done exceedingly well in the product-based companies. India, in a sense, is a large power play in IT services, and that is evident in the way how our TCS has done well and how an HCL Tech has done well, and how Infosys has a market dominant share. In the product space, India does not have a does not have a star so far?
So this is what the job of an investor is, to invest in the seed. When the story is out and then you enter the stocks, then what is the fun? I will tell you, so far product-based technology companies are concerned, I think, when any company develops a product, it takes 5 to 7 years to 10 years to accept, to get the acceptance in the international market. It takes 5 to 10 years and billions of dollars, and then also you are not sure whether your product will be accepted or not. So there are few Indian companies which are developing those products for last 5 to 10 years, and the product which could be accepted or would need, say, billions of dollars, had been actually developed in India in thousands of crores, or maybe 500 crore or thousands of crores. So now entire world, since, as you know better, that entire world is changing, all the enterprises are changing into digitization. So I think their time has come, and their products are nowhere inferior than the international companies, Fortune 500 companies, and they have got their strength and their niche because of the lower cost of development. So now, since everybody is turning into digitizations, and everybody cannot afford to deploy a product of Fortune 500 companies, so they have to look for the companies which are giving the same product at a reasonable price. So there the opportunity for Indian companies come into the picture.
Okay. According to public information, you have made a large investment in Tejas Networks. Tejas Networks, when it went public, it was the toast of the town because of the unique ability they had to really ride on the entire digital infrastructure. Then came the decline. A lot of receivables have been an issue. You bought into Tejas when the market opinion is completely against it and the business is going through a pain point. What gives you the confidence that Tejas will make a comeback? And are you also endorsing that India right now is going to be, or companies which have a presence in the telecom infrastructure space have a bright future ahead?
Tell me, Nicole, one thing: which company in India spends, say, 10% of their revenue every year on year, in R&D? Tejas is one of such company. Once again, I will tell you, it is not at all a recommendation. My buying was at 40 rupees, 45, 50 rupees, up to 60 rupees. So I'm not saying, I cannot say at 110 or 120 or 30, you go and buy Tejas. Please do your homework. So what I'm just sharing, whatever points actually made me invest in this company, is that 10% of R&D spends year on year. And so far they have invested more than 1,000 crores in their R&D, maybe 1,000 crore, 1,300 crore. And, in the month of June or July, stock was available at a market cap of 400 crore or 500 crore. And company has 300 crore cash in the bank. And they have developed a product. As I said, it takes time. A product you can't develop if you have to compete with Nokia or Ericsson or Huawei and all, which what Tejas is doing. Then it takes time. Because in India, R&D spends are very less, nothing, compared to what international companies are doing. So now this is what what Tejas has developed, and the application of the product which they have really developed, they are used in like fiber to home and 3G, 4G and 5G. So I think they have good technical knowledge and competing with all Fortune 500, Fortune 50 company in the world. So, and because of this Atmanirbhar and whatever Mr. Modi's vision of India, Skill India or whatever, I think their time has come, and that is why I have bought the shares. I may go wrong, I don't know, but you have to be in the market.
One marquee investment from your stable has been Vaibhav Global. when you invested in the company couple of years ago, almost 4-5 years ago, it was Webhub Gems. It was a jewelry exporter. Now they've become a platform company. Did you see this coming?
Let me tell you, I'm not a visionary. Okay, I can't see what is happening 1 kilometer ahead from where I am. I can see maybe 10 meters or 50 meters with a torch. So when I move forward to say 20 meters or 30 meters or 10 meters, then I get to see 10 meters further, right? So when I invested in Webhub Global, as you said earlier, it was James. That time they had a platform, but that platform was TV only. They would make their products here in Jaipur, jewelry and all, and sell in USA on TV channel. So they have their own channel. But along with the time, when the trend changes, when the trend changed, fashion changed, and environment changed, they also evolved themselves from TV to they switched over to online selling, and then OTT selling, mobile selling, and whatever digital platform is available in the world. So they have their presence there. And earlier, they were only into the USA, when I invested. So later on, they switched to UK also. Now, 2/3 or maybe 60-65% sales coming from USA and rest from the UK. So just imagine an Indian company from Jaipur selling a product in the USA. It's not a joke, So, and I found that, as you said earlier, they did not perform well. They performed well, but they rose and they fell. So they learned from their mistake, So I took this call maybe, and another thing is this, when I bought the shares, Webhub Global, that time their sales must be somewhere around 1,000 crore, I don't know. And they were competing with their nearest competitor, QVC, was having a sales of around 80,000 crore. So actually it fit into my SMILE principle that you try to dig or try to hunt fish in the ocean, not a crocodile in the pond. So I thought the market opportunity is huge and promoters actually must have learned a lot of lesson from their fall in the past. And luckily it is working.
Now, whether it is Sudarshan Chemicals or Webhub Global or for that matter Atul Auto, the stocks where you've historically invested in, they are not tracked by brokerages. They are not the front league stocks. Is there a particular framework which you apply that you do not want to buy large cap stocks or stocks which are tracked by the brokerages or have too much public views on them?
Yeah, I'm simply applying my SMILE formula, which is small in size, medium in experience, large in aspiration, and extra large market potential. So, and since this formula has worked for me in the past, in last 10, 15 years, so I am okay with this. So I don't mind if, and actually it is an advantage to me when the stock is not, it is not popular or it is not, earth, it is, nobody knows about it. So, and this is the same pattern happening with me every time. Like when I tell someone, okay, I have invested in this company, from Atul Auto to, you can say, Tejas network also. So whenever I invest and if I talk to people, my friends and all, they don't believe, what is this company doing? What are they into? Then they go and search and they say, "Arey, ye to bakwas hai, arey, ye to chor hai, ye to ye hai, wo hai." So this is same pattern is happening. And so I'm using that pattern to my advantage, because I feel that chances of multiplying your money in an unpopular stock is immense. This is what I feel. You can get your quantity also to up to your whatever appetite you have. You can get shares also. You get them cheap also. And according to my limited wisdom, they are easy to understand. I can't understand what is the company like Larsen. On a macro level, it is okay. This Larsen is doing this, Larsen is doing that and all. But beyond that, I don't understand anything, nor I want to understand. So that is the reason I'm investing in all these unpopular, untouched, and all these kind of stocks. And of course, I'm taking a risk. You will ask me, of course, there is a great risk. So I'm not recommending, I'm not telling everybody that you go and invest in such companies because it could be fatal. It could be dangerous. It is very risky, but लेकिन अभी क्या करें अपने को तो रिस्क से इश्क है अपने को.
You're an original thinker. How did you develop your framework? Because your framework of SMILE is something which is your original principle. How did you develop it?
I'll tell you honestly, it was developed later on. First, I did not know about this principle or this formula. I never knew about this. But by chance, I got success in Atul Auto and Sierra Sanitary Ware and Aegis Logistics. As you know, that they went up by 100 times to 300 times, So then I looked back and realized, maybe in 2014 or 15, I realized that what happened, what I did, ये हुआ कैसे, मैंने क्या कुछ गलत किया या क्या मैंने अच्छा मेरे से कैसे हो गया. So then I analyzed and I found that this formula fits into all my investments. That is there in my mind. Maybe I couldn't define the formula earlier when I invested. There are so many things you have in your mind, but not necessarily you can put them into words, So, but later on when the result comes out and you find that result was not up to your expectation, way beyond your expectations, then you actually do your soul searching that what happened. So this is how I realized that maybe these 4 things worked into, and this automatically it is coming, from my heart. Automatically I'm looking for some such companies, So this is how it happened. I will tell you very simple thing. So nowadays what I'm doing, I'm just looking at the market size. I'm looking at the SMILE ka jo E hai. I'm looking there first, the extra market potential. If you tell me that market size is 500 crore and this company is having 400 crore, this and that, capturing the market of 400 crore, and growth is also like 2%, 3% or 4% or whatever, even at 5,000 crore and companies at 4,000 crore and growth rate is 2-3%. I won't invest in such companies. So nowadays I'm looking for the E first, the extra market potential. अपने को खच्चर ढूंढने का है जो आगे जाकर अरबी घोड़ा बनने का है, right? So this is how it developed with time.
It's New Year's time. How about discussing some New Year ideas for our viewers for 2021 and beyond?
I tell you, I haven't invested anything new. Whatever we discussed last, Ramco Systems, I had bought. That was in the month of June. And let me tell you, in the month of April and May, I had many sleepless nights and I thought that world has come to an end. And I was in 5%, 5-6%. I had liquid cash. I sold some shares at whatever price I could sell, just to keep myself going and just to keep my confidence intact. कि अगर दुनिया अगर खत्म भी अगर हो गई तो जितने दिन survive करना, I can survive. So after that, I did not buy, anything meaningful quantity of any shares. Ramco System, Tejas, I don't know, maybe I bought some NIIT, but that was very low price. And Intellect Design also I bought. That again at a very low price. Now they have gone up 30, 40, 50% or 30, 40% from my buying price. So please be careful. Don't buy. Just shut your eyes and buy. Don't do this thing. Do your homework.
Okay. Just to wrap it up, Mr. Kedia, every time we've spoken on this forum, on other public forums and even privately, you always said, Nikunj bhai, share bazaar ki nabs pakdo, understand the pulse of the market. So what is the pulse telling you?
देखो ऐसा है, I'll tell you, I don't know what is the pulse because as I said earlier, I am fearful, I am careful, and I am cheerful. I think stock market, it depends. It's like elephant and 5 men, that story we have read in our childhood. So I don't know how this 2021 is going to shape up. uh, I will remain invested in whatever stock. This is what I'm telling you, saying right now. I may change my mind. So I am comfortable in my current portfolio. And maybe I would continue with that portfolio. And if I have to buy something, I don't have cash, I have to sell something. So I think pulse is this, that we are in a bull market. This is what it appears, right? And look at the data, look at the GST data, look at the other data and all. Companies are doing phenomenally well. What is happening, it is beyond anyone's expectation. So one thing is for sure, which is there in my song also, कि India को short किया तो God भी ना बचाएगा. तो pulse यही है कि be careful but don't short India. और बुल मार्केट में जब यूफोरिया होता है तो आपको ये मालूम नहीं है कितना दूर तक और कब तक ये जा सकता है. So that one should keep in mind.
Okay, Mr. Vijay Kedia, great to have you on the show as always, and here's wishing you a very happy new year from all of us here at ET Now.